Hey, Steve Lewitt here. I'm here to give you your monthly scoop. The scoop this month is called The Efficient Frontier. You know, investing is all about risk and reward. And what's the goal? The goal is to get the maximum gain at the least risk, isn't it? Well, that's what we do in our portfolios. We have what are called engineered, highly efficient portfolios that sit on the efficient frontier. So let me show you what that looks like. So here is a graph that I'm going to draw here, and I'm going to put a line here. Now this part here is all your risk. So as you go to the right here, that's more risk. And this is growth here. So as you go up here, you get more growth. So to the right is more risk, up is more growth. So if I were looking at the least amount of risk, what am I going to get? The least amount of growth, right? So that would be down here. So that would be like an all bond portfolio. Very little risk, very little growth. And then we have, of course, all kinds of different portfolios with different combinations of bonds and equities, this being the most aggressive, right? That's all equities, no bonds. A lot of risk. You know what risk means? It means volatility, how much the market will go up and down in any point of time. So if you have all equities, you know, you might get 8, 9, or 10% performance, but in a year like 2008, you go to lost 50%. Now, let's say you said to me, hey, Steve, I want an equity bond portfolio to do 7%. I'm going to say, how can I get you that 7% at the least risk? Well, I'm going to build a portfolio for you right here. And let's say this is 7%. This is your risk. Let's say that growth is here. Sorry about that. Here's your 7%, right? And this is your amount of risk. In an efficiently designed portfolio, which is what Savant, who manages our money, what we do, you can get this performance at this level of risk, but you cannot get this performance at a lower risk. It's impossible. Or if you want to get 7%, you have to take this amount of risk, none lower. It's impossible. And that's why it's called an efficient frontier. So what often happens is people will give me their portfolios and they'll say, how am I doing? And I'll say, well, let's look and see where your portfolio sits on the efficient frontier. And they'll give us their portfolios, be happy to do this for you, and we'll analyze it for you. So for example, we got a portfolio the other day, it was right here, okay? So this portfolio is taking this level of risk and earning this level of return, let's say 6%. Is that on the efficient frontier? No. What that means is that that portfolio is inefficient. And what we would say is I can get that same 6% over here at much less risk. You see? And that's what efficiency is about. That's what efficient frontier is about. Look at your portfolio, ask yourself this question, am I getting the most gain at the least risk? Because that's what investing is all about. So we'll see you next time.